Hi traders and welcome to the daily recap show for yesterday, which was Tuesday the 20th of September. So these were the zones that we had of reference on the S&P report. We said that if we saw a sustained break with momentum below 38.61 to 38.69, we could see moves towards the bottom of the structure at 38.31 to 38.39. So let's go and have a look at the S&P from yesterday. Okay, so as you can see, it really was all about those areas that we spoke about on the report. The 38, we needed a sustained break below 38.31, 38.61 to 69. We got the acceptance below here. We pulled back. We did get an initial reversal pattern here. You may have been able to get a risk-free on this pattern. If you didn't, then this would have been a losing trade. We would have got above here. This actually looked like a false break at this point. With the impulsive push up, but notice that when we come back through it, we didn't pause. If we'd had a corrective pullback and we got a reversal signal in here, that would have been a nice long, but we didn't. We pushed back through it, come up, and then this was a really nice continuation pattern down towards that 38.31 to 38.39 zone, which we had as support. Against the overall trend, we would be looking for higher time frame stuff on this from this zone. You can see there's nothing really clear on the reversal from this zone either. There is a little bit here, but you're starting to get acceptance below the zone. Although it's not full acceptance, it is something to be concerned of, especially against a trend. But with that being said, as I say, from these sorts of zones, you maybe want to look for the higher time frames, and on a 15-minute, there was actually a really nice reversal pattern there for a long from that zone. So a couple of opportunities there on the S&P, on the higher time frames for the long, on the lower time frames. Excuse me, let me just scroll back. Probably one losing trade and then a nice winning trade there as well to take advantage of that. So that's the S&P. Now let's go and have a look at the Dow. Okay, so very similar on the Dow. Yesterday we said that a sustained break with momentum below 307.40 to 307.90 could see moves towards the bottom of the structure at 305.10 to 305.60. So let's go and have a look at the Dow from yesterday. Okay, so as I say, very similar story on the Dow yesterday. We got this push down below the zone. We did come into that. We did actually get a nice shorter time frame reversal here. However, again, against the overall trend, I would have been looking for something more higher time frame. We did pull back and notice that this time we did, unlike the S&P, we actually held this zone as resistance. It got a nice reversal pattern there to take it back down to the support. On the higher time frames, as I said, although there is a nice reversal pattern here, we'd be looking for the higher time frames because it is against the overall trend. You do have a reversal pattern here. You actually do have one here on the higher time frames as well. So you've got the higher time frame reversal there. To take it up to that zone, and then you've got the second one there. This one's not quite as strong and not quite as good as the S&P one either, but still a valid one, having taken out the liquidity before from that previous low. So some really good opportunities there. The zones worked really well. The analysis hopefully would have kept you safe in the markets. Please let me know what you think of these reports. Comment in the on our social media channels and on our YouTube channel. Subscribe to our YouTube channel. Even join the Keyzone Traders service. It's completely free, and you get to come and be part of the Keyzone Traders community and receive these reports before the market opens. So I hope you're having a great week. I hope you're finding these reports really useful, and I hope you're adding value to your trading, and I will speak to you soon. Cheers.